tuned in to this channel. So actually come follow us how on this journey of helping people become good at a particular area of the market. Maybe not every area, right? And I'm not giving assurance of certain things that you actually become profitable once you follow this channel. You actually tend to get certain information that can help shape the way you view the market and can help you curve your learning process, can help you fine-tune it, and can make it more easier for you. So I want to use this medium again once more to welcome you all. Welcome to the Affair training and forever earning, right? Affair FX training, right? And just like the acronym for and forever earning, right? That's like the slogan, right? So my name is Michael Vincent Afebome. So on this course, I just want to go straight to the point to actually give you guys the syllabus of what we'll be covering on this course. This is like a beginner course. This is like a free course for people who want to tune into my channel to learn. This is a free course. So basically, I'll be sharing with you guys the syllabus we will be covering during this course. Right? In this video, I'll be sharing certain insights on the syllabus we'll be covering, and then I'll be giving an explanation of the markets and different areas of the market. So just stay tuned, right? And yeah, just listen and grab what you need to grab, and we'll move from there. So the first thing we'll be doing, right? I'll be explaining what Forex is. Now, take note. Forex is actually very broad. Forex is a particular part of the market, right? It's very broad, right? On this series, on this course, I'll talk more on the synthetic index, right? Not on the Forex market. Now, what is this Forex even all about? What is this Forex? People say Forex. So what's Forex about? Forex is foreign exchange, right? Foreign exchange, from two words, foreign and then exchange. That's where they got the word Forex. Foreign exchange, FOR then EX exchange, right? So that is Forex, foreign exchange. Trading the difference between two currencies, right? Between a quote and a base and a quote, depending on how you call it, right? Depending on how it's being placed, but between two different currencies, right? Between two different pairs, right? The normal terms we call it is what people call bureau de change. How that people buy currencies when they are low and then sell it when they are high. That's what people do in Forex. They buy low and sell high, right? They buy low and then they sell high. That's what Forex is all about. Now, Forex, like I said earlier, is a part of the market, is a particular market on its own. I'll explain as we go further. Now, the next thing we're going to be talking about is the fundamental and technical analysis. Now, take note. I said in this course, we will be covering mainly on the synthetic index. Now take note, synthetic index is actually a part of a market. It's a different market on its own. Forex is a different market. Synthetic index is a different market. Cryptocurrency is a different market. Indices are different markets. Commodities are different markets. So we are focusing on synthetic index. Now, take note, the different type of markets we have, they have different things you need to actually analyze and actually make money from those markets. They have certain indices you need to pay attention to. When we talk about the Forex market, that is foreign exchange, you need to focus more and you need to have knowledge, right? You need to have a basic and a grounded knowledge on fundamentals, understanding fundamentals. What are fundamentals? Fundamentals are like factors, external factors affecting or influencing the market movement. Right? That's not the basic term. That's not the layman way of explaining what fundamentals are. External factors or external events affecting the main market. Right? Those are fundamentals. And now take note, all other markets apart from the synthetic, right? There are other markets all markets apart from the synthetic are not affected by fundamentals. Now we have this fundamental and technical that I made mention of here are like two ways in which we analyze the market. There are three. We have what we call sentimental, but I'm focusing on just these two. That's what I'm using to teach you guys. But like I said earlier, the market we're focusing on would be the synthetic index. And in the synthetic index, all we need is just the technicals without the fundamentals. So I just explained what the fundamentals is. But since we are sticking with synthetic index for now, we'll focus just on the technicals because fundamental doesn't affect it. Sentimental, to an extent, but it doesn't affect it. So we're sticking to the technicals. So moving down to the straight, what I told you guys we are going to dive into in depth in this free course we are doing, in this free videos I'll be posting here. Now, which is the synthetic index. Synthetic index, in bracket deriv actually are the brokers that offer synthetic index. I will just give a basic explanation for what brokers are. Follow me, please. Brokers are actually middlemen that gives you access to the market you want to trade. Let me just give a basic example, and I believe you understand it from here. Brokers are actually the middlemen. Why I call them middlemen? Let me use an example of individual. You are like a client who wants to trade with central bank. By default, you can't actually bank with central bank. Now, how then can you actually bank if you want to bank with central bank? Let's say, for instance, central bank is the main market, is the market a client wants to trade with, but he can't have access to central bank. But there's a middleman, a middle person who actually can give you access, which is the normal local banks, our local banks around. So you can trade with the local banks who will end up trading with central bank. By default, you are trading with central bank. So the brokers are the middlemen, the local banks. Then the main market you want to trade is a central bank. Then you, the client. Now you need that middleman. That is the broker. You, the middleman, is the broker, giving you access to the main market. Those are what brokers are. They are middlemen who give you access to the market, right? So on this course, teaching you how to create a deriv account. Teaching you how to create a deriv account, how to deposit and withdraw, and then the next thing we'll focus on support and resistance, market trends, the up and down, channel support and resistance, and then we'll go to pips, leverage, retest, and then strategy. Now there are actually pillars in which we trade the market. We actually have, like I call them the 3 pillars to actually become successful. We have what I call the strategy, I have what I call the risk management, and then I have what I call the psychology. Now in this chart you actually see how that strategy carries 10%, risk management carries 10%, and then the psychology carries 80%. That is making it 100% altogether. So now, if you want to follow becoming successful in the market, you need to have more of the psychological part. Now, what is the psychological part? The psychological part is the part that deals with the mindset you have towards the market and how you approach the market. The mindset, your thinking pattern. If your thinking pattern is wrong, you tend to actually lose in the market. What do I mean? I used to tell people this. I think we'll talk more on this when we get to the psychology though. So let me just leave it there. Now, on the strategy, we'll talk more on trend line strategy, the breakout and the retest. We'll talk about entry and the exit of trades, break of structures. We'll talk about reversal patterns. We'll talk about now the rules, the risk management, risk/money management, which is the 10% I told you about, stop losses. We'll talk about take profit trailings, lot size, trading plans. Then we'll talk about the psychology, which is the 80%. The 80% now deals with under the fear and then the greed, right? So yeah, thank you. This will be all we'll be covering in this series of courses. In these courses we'll be taking, right? These are what we'll be covering. So this is the syllabus. So like I said earlier, I'm going to explain a particular the different type of the market in this video, right? So now let me go and show you guys something on the chart. Now this is how the market normally looks like. This is the default setting of the market. It normally shows it shows a green and a red candle. Green, which means the bullish candle, and then the red means the bearish candle. I will explain this when we get to the part of candlesticks and how they function. Now, but for me, I actually make use of I have my default setting, the setting I set my own chart to look like. My chart normally looks like this. Let me just refresh this. My chart normally looks like this. I think I need to refresh it back. Okay, I'm trying to see this to load fast. Okay, so I want my own chart to be like this. I load this. I'm trying to log. Okay, so I'll be using this particular pair VIX25 to actually explain when we continue in this course. I'll be explaining most of what I want on this particular guy. So let me just clear this off, remove joins. So this is how the market, this is my own setting. The normal setting is supposed to be green for bullish and then red for bearish, but this is like my band setting. This is my color. This is how my chart looks like, right? It does a lot to me, right? It's more of psychology to me. in person, right? This is just how I love to see my chart. I love to beautify my chart with these colors, right? So but the default setting of the candles are normally the red, which bearish, and then the green, which is bullish, right? So I said I will explain the market, the different markets we have. Now notice I came to this place that's having hour 25. Now when you want to, if you want to get to this point, you just search on your browser deriv.com, derivtradingview.com, and then it will bring you here. It will give you options, and then you see advanced trading chart. Just click on it, and then it will bring you to this page. Now this, for instance, I want to trade. If you notice, there are different things you're seeing here. You're seeing forex, you're seeing stock index, you're seeing commodity, you're seeing commodity, you're seeing deriv, you're seeing cryptocurrencies. Now these are like different markets. There are a lot of them, but on this particular platform, this Deriv Trading View, you actually have just this few they offer: the forex, the stock index, the commodity, the deriv, and then the cryptocurrency. Now this deriv, take note, it's actually, these are the people that offer synthetic indexes, right? Some people will say I trade the synthetic market, some people say I trade the deriv market. Whatever you put, deriv is the broker, right? So now cryptocurrencies. Now this, for instance, forex, if I click on forex, I'm seeing different examples, I'm seeing different things that you can trade under the forex. Now, like I said earlier to you when I was explaining, I said forex is foreign exchange between two countries. Now see, this is Audi versus Japanese yen, Australian dollars versus Japanese, I said Audi, sorry, AUD versus Japanese yen. You see this AUD, Australian dollar versus USD, euro versus Australian dollar. So these are like the different examples of the forex pair. These are examples of items you can trade under the forex, right? Then when I click on stock index, I'm seeing Saint focus. We can trade here the Australia 200, the Hong Kong 50, Japan 225. Like these are the examples of things you can trade under the stock index, right? There are a lot of them, but these guys offer just this, right? So it's not everything that's here, but these are like, I'm just explaining the different markets we have. When you click on commodities, you're seeing it. It's under gold, and all these are under the commodities on this particular deriv trading view, right? And then the derivative, if I click on it, which will focus more on the synthetic index, you are seeing the VIX, the volatilities, you are seeing the boom and crash. You see all of them. These are the things under the synthetic index, the derivative, right? Which you can also call the synthetic index if you want to. Now, the next is cryptocurrency. Cryptocurrency is another part, is another market on its own. So these are different markets. There are a lot of them, right? But these are different markets, and we are going to be focusing more on the derivative. That's what I told you guys. And I said something earlier when I was saying about the different ways in which we analyze the market, when I was saying we have the fundamentals, we have the technicals, and then we have the sentimentals. I said, for example, for the forex, the stock index, the commodity index, these cryptocurrencies, we actually make use of both fundamentals, technicals, sentimentals to analyze them. But for the synthetic index, that is the volatility index, the boom and crash, the jump, the steps. Now, I'm just listing some examples under the derivative, right, under the synthetic index. Now, sometimes you might hear me say derivative, you hear me say synthetic index. Just know I'm speaking about a particular thing. It's the same thing I'm talking about. Now, if you now want to trade the derivative, this particular one, you don't need both the fundamentals, the mental, and technical. You don't need just the technicals. If you understand market structure, how the market moves, you are good to go. It does not make use of time. There's no time that volume enters the market, though they have time they play out, but time does not really affect it that much. But it has time that it pumps, right? But time does not really affect it that much. It's not really affected by time, right? This the synthetic index, right? So I think on the next video I will talk more on maybe candles to you guys and explain further, but I think that will be all for this particular video. So I want you guys to do well to, if you're new to this channel, do well to subscribe, turn on the notification bell, so once we post a new video you actually get notified, right? Stay blessed, right, and God bless.